Hi. I'll decode difference between holding and positions. Holdings and positions. What is the key difference that you would see between holdings and positions? Let's see here how holdings works and how positions works. Then I'll finally conclude or decode it. If we talk about holdings, let's say you have decided to purchase stocks and stock price is 100. If the stock price is 100, then you will pay full. It means you will pay 100 rupees to buy that particular stocks. So it means once you pay full amount, you will get 100% ownership of that particular stocks. So that becomes your holding. Holding, it means it's a cash buy. Cash buy, again, you are paying full cash to buy that particular securities. And now if I talk about positions, see, you're paying only margin. Margin, it means, let's assume it, the main stock price in the market of that particular security is 100 rupees and you are paying advance. So it means you are paying only 10 rupees and remaining amount your broker is paying, all right, to buy that particular stock. So it means in this particular stock you would see your position, right? You would see your position. So you will not get full ownership rights of that particular security until you pay the brokerage remaining amount, which is 90 rupees. And anyways, it's kind of that you are asking broker to pay loan to buy the securities, and anyone, it means anyone, if pays loan to buy any collateral or any asset, so it means that institutions hold the legal rights of your property to sell that securities. And that's what you would have seen it. If you purchase any securities on margin, and let's say due to market volatility, if stock price goes down or maybe stock price goes up in case of short sale and all, then brokers send you the margin notice. Why margin notice? Because broker will ask you to pay the margin to ensure that you have positions in your trade. Otherwise, if stock price goes down that a set margin limit, then ultimately broker has rights of that security sell. Broker will secure off your securities and directly recover the broker's loan amount. When we say margin, it means broker actually giving you margin. It means broker is giving you loan on interest payment. So interest payment, it means broker will charge interest payment on margin to you. All right. So this trading becomes again risky, but if you have a right strategies in place to buy the securities on margin, then only you would see profit. Now your question would be like, sir, why we should purchase securities on margin? See, if you have 100 rupees, if you have 100 rupees and per share price is also 100, all right, in 100 rupees you can buy only one shares under holding. But if you have 100 rupees under positions, you can buy almost 10 shares. Why? Because you are paying only 10 rupees margin. You are paying only 10 rupees margin to buy the securities, and remaining margin you will pay once you sell the securities in market. That depends. All right. So that's what margin helps you to boost your earning. Margin helps you to increase your profit. But again, once you buy the securities on margin, so it means again you are exposing yourself for a huge risk. I'll quickly walk you through how margin works here. Say here. Look, this is my portfolio. If you see, I have holding. See. Holding all holding, so it means I'm holding security rights. I have everything. When we say holding, it means look, we have a holding. Here if you see, I'm holding this Apollo tire. Holding, it means I have paid full amount to buy this Apollo tire. I'm holding ownership rights with Bank of Maharashtra. I'm holding ownership rights with BEL, Bharat Electronics Limited. But now if I talk about positions, see here, I have a positions with the securities. If you see, I have positions with Tata Motors, I have positions with Tata Power, I have positions with IRFC, I have positions with RVNL. Positions, it means I have purchased securities worth of rupees 5,93,000 and my profit, if you see, around 65,000. So that I have increased. One day profit, if you see, around 26,000. Now, if you see my capital, I have only spent 2,43,000 to generate around 26,000, or I would say like 65,000 profit, almost, which goes around 20% profit. But what if market goes down, so you would see loss of 65,000 in my account also. That's happened. All right, so this is what your positions work. All your holdings you would see in your demat account, but all your positions, see, I have only positions in this particular stocks. I don't have a holdings, I have a positions. Positions, it means I have purchases right to buy those securities in future. So within next 1 year, I'll have to pay remaining amount, loan amount to the broker. Then only broker will release that Tata Motors securities to me. Otherwise, what will happen? I'll sell that. If my trade is in profit, then I'll sell that securities in market. I'll recover the that amount, and then I'll return that amount to the broker. Anyways, broker will do it this automatically with the positions, because all securities are under broker observation. The reason is broker already funded to the securities. That's how your margin works. If you see any confusion between holdings and positions, let me just conclude it. Holdings, it means you are paying 100% amount to buy that particular securities. And if I talk about positions, in positions we are just paying advance amount to hold that security rights to buy in future. All right, and all positions should be under your broker supervision. The reason is broker is providing remaining funding or loans to purchase that security. Okay, so now if I'll just quickly walk you through quick technical term. If you see Tata Motors total value is 2,05,000, but if you see the margin details and everything, how it's work, see, I have invested around 60,000 and broker invested around 1,41,000. So total investment is around 1,81,436 or more than that, right? Around this one that I believe you would see. So ultimately, if I pay 141,925, it's a loan amount. Broker will charge interest payment on this amount as well. Broker will not offer free amount. Broker will charge interest payment amount on this. If I pay this amount to the broker, then only I'll hold ownership rights on those securities. Otherwise, broker will monitor all the securities very diligently, and if stock price goes down in market, broker will ask you to bring that margin to the main level. Otherwise, broker will screw up that securities. That's how your holdings and positions works. In a positions, we are just holding rights, and in holdings, we have paid entire amount to buy that particular securities. Alright, so now I'll just quickly show you how you can purchase the securities on margin, means as a positions. Go to the stock list, any stocks list. Alright, then let's say if I talk about this Adani Power, click on this Adani Power. See, here you can see delivery options. So it means stock price if you see, which is 1153.30, and here if you see required margin is 11503, and I have selected delivery option. It means if I pay 1153, then I'll get the full rights, or I'll hold this security. If I buy as a delivery, because I am paying full amount to the broker to buy that securities, or sorry, to the counterparts. So I'll hold that rights. Not rights means actually I'll hold that security. But if I now talk about here M2F, all right, here if you see current market share price, which is 1156, but here only you need to pay 370 to get the positions of one Adani Port share. main share price is 115, but if you pay only 30% amount, 370, then you will get the rights of that particular security. So this is become your positions, because if you see 370 you are paying as a margin, and remaining amount around 900 your broker is paying, and that's what whosoever paying higher amount, that person will hold the ownership rights of that securities. So it means all your positions should be under supervision of broker, and that's the reason broker monitor margin very diligently. Broker always keep an eye on the market movements. The reason is, if you see, broker taken risk on your trade, broker taken risk of 900 on your trade, and that's what it would be responsibility of a broker to monitor that trades very diligently and quickly that square off if it is needed. That's how your this margin and even margin works in this, or I would say like positions looks like this. And if you see difference holdings and positions, I already told, it's just a matter like you are paying full amount, and under positions you are paying just margin. That's how you can differentiate. Now just try this question, all right? If you can try to answer it, I would say, let's assume it you have purchase price of a Wipro stock is, sorry, market price of Wipro stocks is 500, right? You have paid margin you can say, which is 250, and broker paid 250. So now can you prepare journal entry in the books of fund try this, it's a very complex one. Wipro main stock price is 500, you have paid margin of 250 and broker paid 250. So now the question for you to practice, can you prepare journal entry in the books of fund? Try to answer your answer in comment section, post your answer in comment section, otherwise I'll cover this entry in my next session. When you purchase or when fund purchase securities in margin, how fund creates journal entry in the books of fund and how that impact you would see on balance sheets as an outcome, I'll disclose that in my next session. All right, I'm done with this. If you have, let's say, like this session, I would request you please share this content with others and click on bell icon button as well, so you will get notifications and all. Check the description. I have posted my link for a recorded courses and all, so that you can enroll. Thank you very much for watching. We'll see you next session.